Hello, my name is David Roth from WPP and a very warm welcome to this web seminar with the results of the BrandZ Top 100 Most Valuable Global Brands 2012. We've got an action-packed 66 minutes which includes... In today's web seminar we'll explore the importance of brand contribution, who's made the rankings for the first time, who's hot and who's not. We'll count down the entire top 100, hear views and opinions from across the WPP world, examine the characteristics of strong, valuable brands, review what's going on in the world's regions, learn how you can get the most out of the BrandZ data and insight, and show you how to download your very own copy of the Top 100 report on paper, iPad magazine or mobile app, but not before you've watched this, the WPP BrandZ Top 100 Most Valuable Global Brands 2012 web seminar. Well, I'm now joined by Peter Walsh, who's the Global Account Director for BrandZ. Peter, a very warm welcome. It seems like this is the era of going back to basics. So why don't we start at the very beginning in terms of brand valuation? How do you start valuing a brand and splitting out its tangible from its intangible assets?
Well, the first question I think you have to ask yourself is, what is brand? So I want to do a little experiment. Would you just close your eyes a moment?
I don't think I'm going to like this.
Yes, you'll love it. Now, do not think of Coca-Cola. All right, you can open your eyes. It's impossible, isn't it?
Yeah.
And this is the key point, because strong brands have strong relationships with their consumers. And the one thing that you can't do is help know something or hear something about them or something in your head. And they're therefore being meaningfully different. And that's one of the key aspects that we measure within BrandZ.
Okay, so meaningfully different is important. Explain a little bit about this whole relationship between awareness at the bottom of the pyramid and bonding at the top then.
Yes, indeed. So we have our brand pyramid where we're saying what do you know something about the brand, up to whether you're bonded with that brand. And if you look at Coca-Cola, for example, massive pyramid, even bigger than the average for the top 100, which in turn is bigger than brands on average. And you look at the people who are at bonding, 30% of them, there's the next 41, which makes up the 71 at Advantage. And those people make up, most of the customers, not all of them, but they make up, crucially, most of the sales or the value.
So higher bonding, higher Advantage equals better sales.
Absolutely. And that proportion of sales, if you like, coming from those people who know that the brand's meaningfully different, is our brand contribution percentage.
Okay. How does that then translate itself into a valuation?
Well, this is the key difference of the optimal valuation. The first thing is the financials, the intangibles from the financials that are there. We then look at those and say, how much of those financials are driven by brand? And that's where we have the brand contribution measure. So we multiply the financials by the brand contribution. Now, if the brand contribution is low or small, then you've got less of a multiplier effect to your financials. But if it's big, obviously it increases your valuation. So this is a key ingredient, the brand contribution effect.
And the way in which BrandZ measures the brand contribution is very different and, in our view, significantly better than any other brand valuation methodology. So let's just take a look at that in terms of BrandZ and Interbrand.
Well, absolutely. It's an objective measure for a start. Our competitors tend to have other people, formulating it, guessing it, and so on, very subjective. So this is objective because it's from the consumers who do that. And so if you take a brand like HP, which has got an average brand contribution, the values between Interbrand and ourselves are about the same. But if you take a brand like Cisco, which has got a lower brand contribution, we take that into account, and so it factors down their value. But Interbrand doesn't do that, so in a sense their value is higher, so they're overvaluing it. Look at it the other way for when the brand contribution is high, like Apple, for example, massive value that we've got it because of the strong brand contribution, whereas Interbrand completely undervalues it. You can see that over time, actually, when you look at what Interbrand was valuing back in 2006. Still lower than us because they're not taking account of the brand contribution. And it does go up over time, but only gently. Whereas we're seeing the brand contribution increasing, plus also we're taking account of all of the financials, and so we see a massive increase in terms of that brand value. Very different.
Well, Peter, thanks very much for explaining that. There is a much fuller video on the web resources page that goes into the way in which the valuation works. But I think the key for me is the brand contribution is a measure derived from consumer research, which is only available through the BrandZ data. Don't go away, Peter. We'll be back with you a little bit later on. Well, I'm now joined by Christiana Pearson, who is a Director of Millwall Brand Optimal and the person who has undertaken the rankings for this year. Christiana, a warm welcome. Thanks very much.
Thanks.
Let's take an overview of the key themes for this year.
Sure, David. I think there's three major themes this year, which are a continuation of last year's themes. The first one being our #1 brand remains Apple. They're now up 19% from last year, biggest company in the world in terms of market cap, still a very strong brand. Then we have our fastest growing brand, which again is Facebook, at 74%, and that's at the time when we valued it, predictions were that its valuation was going to be at 85.5. We saw that it's in fact 104 when they went public last Friday, so if they maintain that, we might see an even bigger rise from Facebook. And finally, the most exciting one for me is the shift of power between developed markets and fast-growing markets. And whereas 88% of our brands came from the US or Western Europe the first year that we did this, we're now at almost a 50-50 split. And in fact, we have our first African brand this year.
So let's take a look at who that African brand is.
MTN was born in Mandela-era South Africa, and to this day, it's a brand driven by that distinctive optimism.
A brand still defined by its original can-do attitude and its commitment to progress. From the first, a brand defined by more than talk, but action.
When you hear that MTN, Africa's largest mobile telephone network, has become the first African brand to make it into the BrandZ Top 100 Most Valuable Global Brands, it's important to understand why. It's the latest chapter in the journey of Africa's emerging super brand, built on the phenomenon of a business that operates at the intersection of social change, culture and business.
It's the story of mobile in Africa and the role of Africa's biggest player in the category.
In a place where the challenges of infrastructure and environment have thrust millions of people into marginalization, mobile networks arrived like a secondary grid, connecting individuals and societies, providing the ability to communicate and access information. In Africa, the accessibility of basic voice telephony that we know and take for granted had a transformative effect on these people and countries.
And now, with new digital applications for third world consumer needs, the mobile web is increasingly geared to serve individuals and communities living in this so-called third world. So emphatic is the mobile phone's growing impact today that it's been hailed as Africa's silver bullet. But it wasn't always this way. Initially, mobile networks had contract-based services geared towards the wealthy. On a continent where formal employment is rare, mobile telephony was for the elite, and it looks set to stay that way. But new brand, MTN, rising out of an exuberant post-apartheid South Africa, had other ideas. MTN introduced Pay-as-you-go, Africa's first prepaid airtime service in 1996, and the mobile telcos have never looked back since. There's no question that making mobile telecommunications more accessible to more people, regardless of socio-economic circumstance, has driven the worldwide growth that we're seeing today. In 2011, when the United Nations declared access to the internet a fundamental human right, it was a recognition of the platform's ability to enrich lives. But the internet is just one of many ways in which mobile telephony is enriching lives. Mobile innovation is diverse and expansive. MTN is once again leading from the front, with innovations like telemedicine and voice-based apps like iCow and UJuicy, a mobile resource locator. Accessing the internet on your mobile phone is only part of the tale. Nowhere is the astounding utility of a mobile phone more apparent than in the rise of mobile money. This mobile network-based system allows customers to virtually wire cash to each other, from SIM card to SIM card, or from phone to phone. MTN Mobile Money has been launched in 13 countries. Mobile money is still in its infancy, but we're arguably looking at the future of money and financial transactions, and it's unfolding on the bustling streets of Africa. In Uganda alone, there are now 2 million mobile money customers, and only 500,000 banking customers in the formal sector. Only when marketing meets with social need do we start to see this kind of society-wide traction. At the heart of this African business was a clear vision, not just to spread and proliferate products or services, but to speed up the progress of the emerging world. Companies that deliver infrastructure like mobile telephone networks play a much bigger role than just in the marketplace. There are places on the continent where communities are yet to experience running water or electricity, yet they have access to an MTN village phone and therefore access to the world. Of the 21 markets it operates in, MTN is number 1 in more than half.
MTN is no ivory tower. This is a brand of the people, by the people, for the people. So much so that its original South African culture has been absorbed by a bigger, more expansive sense of a broader African expression. While other companies across the emerging world import Western experts to drive and define strategy, MTN is driven by local people with local insight, populated by the people it serves. MTN is not just a company, it is an emerging world community, united by the shared vision of enriching lives.
Through projects like Yellow Care, the MTN Foundation empowers all MTNers to enrich the communities they serve through health, education and community empowerment. In fact, MTN is the most significant social investor in many of its markets. MTN is also one of the biggest employers on the African continent, training local people to deliver on a global brand, yet keeping the company rooted and involved in society. For many outside of Africa, the 2010 FIFA World Cup, South Africa may have been their first contact with the MTN brand. But in truth, that triumphant spectacle was the culmination of a powerful brand story that spans a continent and has empowered a generation of Africans. A continent-wide campaign, Africa United, ran in MTN's Pan-African markets, mobilising individuals and communities. The 2010 FIFA World Cup, South Africa with MTN as first ever global sponsor from Africa. This brand was determined that this 2010 FIFA World Cup would be an African World Cup. The Africa United campaign outperformed campaigns from other major sponsors in several key markets. From Kampala to Kumasi, every MTN subscriber and every African knew this was their World Cup. Whilst in South Africa, the local Ayoba campaign did the same, galvanising the host nation. So much so that the word Ayoba will make its way into the next edition of the Oxford South African English Dictionary. MTN, the global, local brand with the substance and stature to represent a continent's dreams.
From its beginnings in South Africa, MTN now operates across 3 continents, in 21 countries and has over 170 million subscribers. MTN is now a pan-African company, indeed an emerging world company, as its 26,000 staff span 55 nationalities and it conducts its business in 5 languages.
It's a company of firsts. On the African continent, the list is endless. But perhaps the most important lesson in the MTN story is not one of innovation or of telephony, but a lesson about the convergence of business with societal change in developing countries. MTN is more than just talk. Through MTN, we learn that to succeed in these growing markets, it's necessary to have the spirit of a frontier settler, not a corporate bureaucrat with a slick party line. We learn that brand equals behaviour, not image. This is the MTN way, a way of doing business, a way of engaging with a customer, a way of seeing the world, and a way of building a brand with the limitless opportunity of today's emerging markets, where it's not what you say that counts, but what you do.
So it gives me great pleasure to congratulate MTN on yet another first. The first African brand to be included in the BrandZ Top 100 Most Valuable Global Brands. Well, I caught up with Sarami, Jen and Paul from MTN via video conference, and I started by congratulating him and asking him what the MTN brand meant.
Firstly, thank you very much for that accolade. I think it's a big milestone for MTN. How important is MTN to us? I think personally for me, it's been my life for the past 10 years, having joined MTN 10 years ago. I think looking at the growth of the brand and the company since its inception, it's been an impossible and unbelievable journey. And I think not just what MTN means to our shareholders, but more importantly, the changes and the significant changes that MTN has made to subscribers and communities across the continent. Ours is not just a short-term approach. We are here for the long run, and we make sure that we empower the people and the communities in which we work.
You know, people talk about co-creation a lot now and who really owns the brand. The beauty of the MTN brand is it was never really invented in a boardroom by a bunch of strategists. It was really a very democratic process with all of the local CMOs drawing on local nuances. So it's always really been a brand that's reflected the markets and the customers, you know, in terms of our can-do spirit, optimism, the warmth of the continent, aspiration. It's been a true reflection of our markets and our customers, and I think that's really what's made it a success that it is today.
Clearly, MTN is now in many more countries than when it first started and when you first joined. How do you maintain and control and grow a brand across so many different territories?
No, it's a question that we ask ourselves repeatedly. I mean, when you're talking about moving into new markets with not only new languages but new alphabets, how will we express new cultures? How will we express the MTN brand in Arabic, for example, or Pashto or Dari? How will we express the brand in the digital environment? You know, and I think in the near term, as we start to go into new areas like banking, medical, insurance, how will the brand be expressed in terms of these new business lines? So it's something that we look at all the time. As I indicated before, it really is a brand that was built on consumer nuance, but the lovely thing is that it's such and everyone talks about a core human universal truth, and I think we were able to capture that, and which has allowed the brand to really grow and translate into a variety of different markets and cultures in the last 5 or 6 years. So across Africa, French-speaking West Africa.
We've seen probably a huge increase in the way in which mobile in Africa is being used as an alternative bank. How do you think that technology is changing people's lives in Africa?
Well, I think that's quite a significant growth as well in terms of people being able now to transact on their mobile phones. You know, it's not just about access to communication, but also access to transactions and actually being a viable and economic player in the entire society is a big one. You know, from something as simple as a farmer having access via SMS to know where the markets are, and certainly now being able to pay for those goods really does improve their ability to contribute not just to society but to communities, to the whole economy as a whole.
Many global companies are now looking much more closely at Africa as a potential engine of their growth. What advice would you give to such companies who are looking towards Africa as a market entry strategy?
I would say welcome, or as we say at MTN, yellow. We're looking forward to an opportunity to partner with some of the other powerful and aspirational global brands that are out there. And we'd say, we'd love to have a chat and share with you the learnings that we've had over the last 10 to 15 years.
My advice would be, coming into Africa, you have to have a broader mindset in terms of the way you want to operate in these countries. And it's got to be, I would argue, slightly, for want of a better word, more altruistic, in the sense that it's got to be a win-win approach, in the sense where you're coming in, you're building infrastructure, you're happy to invest in beyond just in what your core business is, but also in helping to uplift communities.
Well, having taken a very interesting look at Africa, now let's look at the total value of the BrandZ Top 100 for this year.
Sure. Well, we saw that this year, in fact, the value of the top 100 grew 0.4%. But if we are to look at it from year 1, 2006 to 2012, we've grown that value has grown by $1 trillion, which is a very impressive number. 0.4%, same as the last recessionary period we had after 2008, but most of that led by financials and not by brand.
Who are the fastest risers in this year's tables?
Well, we spoke about Facebook when we spoke about the three themes. We also have quite a few brands from the luxury sector, Hermes, Hugo Boss, and Ralph Lauren. And we also have our credit cards, Visa and MasterCard, doing very well.
So we've seen some both old friends and new friends back in the top risers. Absolutely. For this year, and we'll be delving into more of that when we look at some of the category changes in a few moments' time. We've always had a look for the last couple of years at our bundle of BrandZ top 100 brands versus the S&P 500. How has that performed this year? That continues to do very well. In fact, our portfolio of top 100 brands is up 37.5% compared to the first year that we did this study, whereas the S&P 500 is up 0.4%, so pretty much stable. So again, sort of proving the point that good, strong, valuable brands are good financial bets as well. Absolutely. Okay, well, having seen that, maybe now is the best time for us to take a look at all those brands that have made it into the BrandZ Top 100 Most Valuable Global Brands 2012.
I got it, I need it, I can't wait to see it.
And our congratulations to all of those brands. Christiana, let's take a look at the category picture. Last year versus this year, what do we see in the category changes?
Well, we see about half the categories have gone up in value as an aggregate, and half of them have gone down. This is led by luxury, fast food, and apparel, and reflects some of those fastest growing brands that we saw before. So in luxury, we have Hermes, Rolex, and Burberry leading that growth. We also have in fast food, Domino's and Starbucks, who's made a comeback. And in apparel, we have Uniqlo, Ralph Lauren, and Hugo Boss. So, you know, they do reflect some of those fast-growing brands. In terms of those that didn't do so well this year, well, you know, not surprisingly, things like insurance, financial services, and hard times do tend to suffer more than more branded segments such as luxury and fast food.
Well, year on year is clearly very interesting, but sometimes it's more illuminating to have a look at a larger time period. We've been now doing this valuations since 2006. So what's the long-term picture look like? Actually
quite different than the year-on-year picture, which is quite interesting. In fact, the categories that's grown the most since 2006 is fast food, 193% increase. Within that, just Subway on its own has grown more than 5,000% in brand value. In technology, of course, not surprisingly, it's such a part of our lives that, you know, 166% growth is probably not so surprising, and so on. But, you know, they've all grown since the first year, except for cars, which have had a pretty tough time in the past 5 years.
Well, thanks very much for that, Christiana. As part of the process of really understanding some of the issues related to the brand movements, we've spoken, as we do on previous years, to many of the experts in the categories across the WPP operating companies. Let's take one moment to get their perspective.
Price is top of mind. Balancing local and global brands.
American cars are back.
Rethinking the American dream.
Being transparent is a must-have.
Overcoming resentment through utility.
Risk is back at the table.
The real social experience in the retail industry.
So it's all about the hunt for the deal.
Showrooming continues to be a retail challenge.
Bricks and mortar stores offer experience. Luxury is an investment.
The luxury industry is up.
The opportunities to communicate the right messages are massive.
Go east.
Blue gold is natural gas.
Personal care becomes more personal.
Health continues to be a long-term trend.
Facebook is at the top of its market.
Companies will leverage big data for maximum effect.
We're now in the world of ecosystem.
The rise of the platform. Dramatically increased pressure on network bandwidth.
Fighting for relevance.
The development of independent ecosystems.
The power of mobile.
Well, I'm rejoined by Peter Walsh. Peter, to get into the BrandZ Top 100 Most Valuable Global Brands is a tremendous achievement, but we do see a difference between those brands at the top of the list and those brands towards the bottom.
Indeed, it's the survival of the fittest, as Darwin might have put it. And we see that the top 10 brands in our ranking, because they've got superior brand contribution, which is sustaining their growth, grow hugely from 2006 to 2012. And the bottom 10 still strong brands grow much less so. So it really is the strong grow stronger.
Clearly that's testament to the fact that in order to continue to be a big, valuable brand, you really have got to put a lot of effort on your brand contribution.
Absolutely. And in fact, it's interesting that the 6 of the top 10 were in the top 10 back in 2006. And all of those brands are still in the top 100. And that's because they've been working on their meaningful difference to consumers.
Well, if you take a longer term view from 2006 to 2012, we've clearly seen a big growth of technology, not just technology brands, but also brands that are using technology.
Definitely. And this is the key point, that the technology brands themselves are relevant, are meaningfully different, and an increasing part of our life. But there is a tension, if you like, between people wanting a great brand experience, and it's the technology brands that are delivering that, not just for their brands themselves, but for other brands. And that tension, if you like, where people are almost pestering to get the best of technology into their brand experience, regardless of what the brand is a very powerful growth driver.
Well, as part of that technology push, clearly over the last few years, there's been a huge growth in social network brands and brands that have earned buzz. What do we see from that?
Well, it's very interesting. We measure how many fans a brand has, and there's a direct relationship between brands with more fans create more earned buzz. So people are talking about them, twittering about them, and so on. And what you see really spectacular in this year's rankings is that if you look at the top 10 earned buzz brands, they are worth 5 times the value of the brands with much less buzz.
Well, joining me now to delve into the results in a little bit more detail are a number of people from around the world. John Gazima, who's the Executive Chairman of BAV Consulting, Eduardo, who is the Managing Director of Brand Analytics, and Doreen Wang from Beijing, who is the Director of Millward Brown offices in China. Well, first of all, thank you all very much for joining. I'd like to start really with a general overview. We've seen in this year's rankings the total valuation of the BrandZ Top 100 Most Valuable Global Brands pretty much static year on year at about 0.3% of an increase. A lot of that staticness has really come from the fast-growing markets where we've seen a decline in the overall rate of growth of some of the Brazilian and Chinese brands. Eduardo, let's start with you. What are the main factors this year that have caused Brazilian brands to overall decline in value?
Okay, hi David. Something very important to highlight is that in 2011 we saw a huge growth in the total value of the top 50 Brazilian brands. The top 50 Brazilian brands grow almost 50% in 2011. And in 2012, they declined 23%. What happened in reality is that last year, we grew a lot. And now there is a lot of expectation about our economy, about our brands. And at the end, due to all financial crisis, due to all capital markets problems, we do have some problems in our brands.
Thanks very much. I think that puts that into context. Doreen Wang, we've seen the latest 5-year Chinese economic plan, and that's put quite a lot of emphasis on Chinese companies to grow both their business and their brands out of China. We've got a new political leadership taking place across China over the next few months. What challenges do you see from a brand perspective of Chinese companies who are clearly large in China becoming big global brands?
David, and as we see in the BrandZ Top 100 brand, there are 13 Chinese brands in the list in this year, 2012. So that's very exciting. But still, and we see two groups of brands. One is the state-owned enterprise, and the other are the private Chinese brands. And those are the brands who have experienced faster growing in their brand value over the past few years. And for the Chinese brands overall, the key challenge, and there are two major key challenges, and one is Chinese brands still lack of a meaningful differentiator, and even in the domestic market in China.
So moving on to looking at some of the differences we're seeing in increasing in values of some of the sectors. There are two sectors that stand out the most in terms of the increase of brand value, both at running at a 13% year-on-year increase, the luxury sector and the fast food sector. John Gazima, what observations can we make about the fast growth of two very different sectors?
I think you can call this the cheeseburger and handbags scenario of 2012. I think really what you're seeing, David, is a perfect example of a bifurcation of markets and also a maturing of consumers. Before the financial crisis, there was, I think a strong emphasis on needing to have the best in everything and excessive spending, debt-fueled consumption that drove about and contributed to a lot of the problems that we had over the last 3 or 4 years. One of the things that we saw in our data coming out of the global financial crisis was one of the fastest growing returning categories was luxury. And as you go into the data, what you start to see is that people are actually spending strategically in categories they value and in brands that they admire.
Doreen Wang, status has always been seen as a bit of a weapon in China and luxury brands as tremendous ammunition. Are we seeing at all a change in the way in which Chinese consumers view the luxury market?
The luxury market in China has been growing very fast over the past decade, and China has become the second largest luxury market. Still the demand for luxury goods in China has been keeping growing, and we have still, but the key observation is still lots of Chinese consumers are making the final purchase overseas, but the domestic sales, the domestic purchase is also catching up.
John Gazima, we've talked quite a lot about trust and the changing nature of trust. Clearly, one of the biggest building blocks for brands, we see that from our BrandZ data, you see it from the BAV data perspective, is the notion of trust. How do you think trust is holding up in an environment where, to be honest, most consumers trust more their contemporaries through social networking sites than they do big international global brands?
Yeah, you know, David, it's really interesting. We looked both at the BAV data and the BrandZ data, and across the spectrum of both of the studies, what you start to see is sort of one common theme, which is that trust is the new black. I mean, trust is really in style today, and I think it's a definition really of sort of a changing landscape where there's high degrees of cynicism really sorted with easy access to social media, which means that anyone in a nanosecond can figure out whether or not you're supporting your claims or delivering on your customer service.
One of the trends that we're seeing right across the world, and maybe even more with more veracity in fast-growing markets, is how mobile and how social we're all being as consumers. What impact, John, is that having for brands?
So I think every marketer has to be thinking about the trinity of social, mobile, and gaming, because they're becoming so pervasive in culture today.
Well, for the very first time in the history of the BrandZ Top 100 Most Valuable Global Brands, we have an African brand in the ranking. John Gazima, what does that say to you about Africa's place in the emerging markets?
It's incredibly exciting. I think, you know, the most hopeful aspirations I think all of us have is that, you know, Africa is going to be the next Asia, and you're going to see tremendous emergence in these brands in these sectors.
Well, African brands might be a new story for the developed markets, but of course China and Latin America have been looking at Africa very closely over the past 5 or 6 years and investing substantially in the growth of Africa. Doreen, what do you see from an African perspective in China?
African market has been perceived as strategically important and for Chinese brands. And African market and the Middle East market, so those are many countries in those markets have long-term and a strong relationship with China.
Well, let's move to the future. And if you all had a working crystal ball, what future do you see for brands?
David, John Kenneth Galbraith said the only value of economic forecasting is to render astrology credible. And so I say that with humility about the future, because if I knew that, I'm not sure I'd be sitting here. But I do think one of the really interesting and important trends that we've seen out of the BAV data is this shift to more values-led consumerism. We found in our data that 72% of people throughout many of the major developed markets were looking for brands and companies whose values aligned with their own. Authenticity, trust, respect, dignity.
Well, thank you all very much for sharing your thoughts and observations and insights with us. John, Doreen and Eduardo, thanks very much for being with us. Well, Christiana, let's take a quick overview of what we see going on across the regions.
Okay. Well, if we look at our 5 regions, we have this year only one region as a whole which has grown, and that may surprise some, but it's actually North America, though I would say that's probably, it's more of a recovery story than a growth story. The rest, continental Europe, UK, Asia, and Latin America, also a decline in their aggregate brand values.
Okay, let's take each one of those in turn, and let's start with North America.
Okay. Well, North America, what we see if we look at the top 10 North American brands is they pretty much reflect the top 10 in the top 100, so it's not surprising that most of these have actually gone up in value, with the exception of Google, Microsoft, and GE.
Okay, continental Europe.
Continental Europe, a bit of a mixed bag. We have industries like telco not doing particularly well, but then again, that's made up by brands like BMW, Mercedes, and H&M.
And then UK, clearly not part of Europe.
UK definitely suffering from our recessionary times. We only have 2 brands in the top 10 which have grown, and that is Shell and Dove.
And the momentum scores are relatively low there as well.
They are relatively low, yes.
And what do we see in Asia?
Well, in Asia, we see a bit of a mixed bag. They were our big riser last year and the focus of many of our stories. This year, they have seen some of the telcos going down and a lot of the financial services going down, but that has also been counteracted by a very high increase in things like Baidu and Tencent QQ that have done very well. But their momentum is very high, so we can expect them to come back quite strongly soon.
And LATAM, which really was the star of the show last year.
It was. LATAM this year has been affected by a correction in the stock markets. Most of the brands have gone down in value. Also devaluation of the currency. But we have 2 brands that are still growing, and those are 2 Brazilian beer brands, Brahma and Skol.
I think that really reflects what we've just heard from Eduardo a few moments ago.
Absolutely.
Christiana, thank you very much indeed.
Thanks, David.
So, Peter, we're almost coming to the end of this webcast. Let's take a helicopter view of some of the key takeaways.
Well, I think there are 4 things, David. The first is the continuing growth of fast-growing markets. So 1 in 5 of the brands is from fast-growing market, up from 2 in 2006. And we see Europe, USA declining in terms of the number of brands. Although, a word of warning, the US still has 9 out of the 10 top brands, and that's because of its superiority in terms of technology. That leads to the second point, which is technology. In terms of technology, that is a major driver of value, not just for the technological brands, but for other brands that are using technology in an innovative and interesting way that's relevant to consumers. The other area I think we haven't talked that much about, but it's actually clients are increasingly controlling the brand experience. We see a number of brands, particularly retailer brands, which are buying back their franchises in order to make sure that the brand experience is powerful. And of course, that's the last point where we started, really, the importance of brand contribution and making sure that consumers know why your brand is special and why it's different.
Well, thank you very much indeed, Peter, and thank you, Christiana, for being with us. The BrandZ data is available in many ways. One of those is through mobile apps. To see how you can get hold of the data on your mobile, take a look at this. Well, for all those iPad users out there, please go and download the app. It's very informative, and I'm sure you get a lot of fun out of it as well. If you have any questions about anything to do with the BrandZ Top 100 Most Valuable Global Brands, please send me an email and I will make sure that your questions get answered. Of course, the BrandZ data is used for many different things, not just the brand valuations and brand contributions. In order to see how the BrandZ data can help you, take a look at this. Well, we've come to the end of today's web seminar, and thank you very much indeed for watching. All that remains for me to say is to download a copy of the complete report for the BrandZ Top 100 Most Valuable Global Brands. Just go to brandz.com, and all of the resources from today's web seminar, the videos, the interviews and the presentation charts are also available as a download, and you can download them from the web address here. Of course, don't forget to go to brandz.com/mobile to download all the mobile apps, and you'll have the data with you wherever you go. Well, I'd like to say a big thank you to all of the guests who appeared today, both physically and virtually, all of the production team, and from me David Roth and everyone at WPP, thank you very much indeed for watching.